Good morning, Predicted Trades family. Sorry for that blank screen for a second. The setting was a little weird, but got it all sorted out. It is Monday, November 7th. Hope everybody had a great weekend. And just to review, last week we had our FOMC on Wednesday. The market basically just kind of went sideways and slipped into FOMC, where we got a big strong reaction up and then a huge reaction to the downside. Getting back to our moving averages, having a reversion to the mean, the daily 21, which is this white line, on Wednesday. We slipped a little below those daily moving averages, these colored stair-step lines, right? We slipped a little lower just to tag some key levels. 3708, 3741. That 3708 and a half is my key level. Yeah, we slipped a little lower, but if you look at the close and open of these candles, that is a hold of that level. And even on Friday, we did not get down to test that level. We pretty much held above 3715. And we've started a nice little uptrend back to our moving averages, which are all now pretty tightly stacked from about 3784 up to 3811. And we're pretty much going to open right in the middle of those today. With that hold of 3708 and coming back to moving averages, there is always the potential to reject the moving averages and make an H to take this out. But overall, a pretty good hold for the market to just slip through moving averages and come right back to them. There could be some good scalps down to that level, but I wouldn't be getting overly bearish until that level gives out. Should that level give out after repeated rejection of the daily moving averages, then we could be talking about a downtrend on like a weekly candle, right? But for now, decent hold after a nice rally, right? We rallied up above the daily moving averages. We pushed off of them a couple of times and kept rallying up to new highs on the drive. And you know, that FOMC economic data can just give us a pullback reversion to the mean to set up for continuation on the rally. So this week it's all about, can we stay at the moving averages and push off of them back to the upside for continuation on this rally? Or is this truly a change of trend? We cannot get through our daily moving averages, and we do come back to make an H and head back to new lows. Let's just throw this on an hourly to get another week or so in there. There you go. Just so we can fully visualize the recent lows that we have been rallying from, and that this pullback is holding at key levels. Frankly, I wouldn't have been surprised for it to come back to this 36.39, 36.68, kind of where the second pop of this rally happened. But we did a great job holding at 37.08, so in a lot of respects, still looking decently bullish. But we've got to get above these moving averages and start pushing off them again. Before we get too far ahead of ourselves, let's take a quick look at our economic calendar and our earnings calendar for the week. This week, pretty light, moving into Thursday, right? Basically nothing today that's too significant. Tomorrow we do have elections, right? But, you know, a small business index, wholesale inventories on Wednesday. Most of these are not market moving type economic data, because the big one is Thursday, where we get CPI, inflation metrics. So this is going to be the big one. The results of this CPI will also, can lead into the Fed's decision at the next FOMC meeting to start pulling back on the rate hikes and stop, move from a 75 base point to something like a 50 base point increase. Powell did hint at that at the last meeting, this last week, where he did make a statement saying that as early as December, they could, reduce the rate hikes, not be as aggressive as they have been with the continued 75-point rate hike. A lot of their decision making will hinge on this CPI data. So, with that coming out on Thursday, it could set us up for a nice little rally Monday, Tuesday, Wednesday, leading into CPI. Because if the numbers are favorable, it could cause a good reaction to the upside. If inflation is coming down, that's going to lead to the, potential rate hike reduction, however you want to word it. But overall, if those numbers come out negative, we could see a big drop and push away from moving averages to the downside. So big one is on Thursday. We do have a little bit on Friday with University of Michigan, some more inflation data, right? And we do have some Fed speakers this week. It looks like a lot on Friday. And with them speaking after CPI, that could we could see some language when they speak that will give a hint to the decision they might make it in December's meeting. Sorry, convoluted, but big ones are Thursday and Friday, inflation data. We'll have to see how we react to that. Next week, we've got some PPI, manufacturing data, retail, jobless claims, and home sales. So, kind of a typical week after CPI next week. And now let's look at our earnings calendar real quick. Earnings calendar. Where are you? There we go. So, this week, we've got a little bit of Palantir, some biotech, and Lyft, Activision. On Tuesday, we've got some cruise lines, so some travel, some retail. After the bell, Disney, AMC, going to be the big ones on Tuesday after close. Looks like we also have Upstart and Affirm. Wednesday, the Trade Desk, Roblox, if you're into that. Looks like Rivian on after the close. Ooh, Dutch Brothers, huh? Beyond Yeet, Neo, Yeti. So, no big names really this week. Disney. There are a couple, right? I'm sure AMC can get a little silly around earnings. But overall, we've gotten through all of big tech. We've got through a number of chips. I think NVIDIA is like next week. So, a busy week on earnings for sure, but I would say nothing really market moving. Disney will be interesting. But yeah, definitely going to be a busy one. There will be some interesting plays to hit around that. So, overall, main thesis for today. Just like Friday, we're going to be opening near our daily 21 and near a squeeze top. On Friday, we dumped for the first half hour back to a key level and then took off to hit the top of the squeeze cloud and those moving averages, where we rejected, came back to test pre-market lows, where buyers stepped in and took us right back up. So overall for the morning, we need to see 37.73 hold up. This daily 21 as well, near 37.80. They're making a zone of support that the overnight has pushed us up above. That needs to hold up early in the day. Otherwise, we're going to have kind of a repeat of Friday where we slip down to retest 37.41. Basically, if we give up this trend line, which is right near that 37.73. Will, just like Friday, come back to retest 37.41. And should that not hold, then again, the bottom of the squeeze in 37.08. Should that give out, that's when we can see some extra momentum come in. Bears, sellers taking us down to the next key levels. But if we can hold up early on at this 37.73, daily 21, we can start to push through the squeeze top. The daily 50 near 38.07, 38.11. And even if we do take a dip, looking for 37.41 to hold us up kind of in the middle of the squeeze, setting a higher low to push to again push up through the top of the squeeze. If we can get going through the upside and fire this 2-hour squeeze, yeah, 2-hour squeeze, and get through the daily 50, then it's back to the zone that we left from FOMC and the highs from FOMC. So we've got our levels to the upside and levels to the downside should we start to break out of this 2-hour squeeze. Let's go to NQ. For NQ, definitely one of the weaker indices. Tech definitely slipped the most, I would say, last week after FOMC. As you can see on Friday, didn't get back up to our daily moving averages like ES did, and still sitting well below them. But we did get down near the bottom of a daily squeeze, meaning that we could have a lot of strong support here to carry back up through these moving averages to test the top of the daily squeeze. Now, can we slip through a daily squeeze and fire to the downside? Yes, but we've kind of got stacked squeezes, a 1-day, a 2-day, all down here near 10,500, ready to support us. So, just like Friday, we are opening near this zone, but opening a hair higher in it. We do still have this squeeze to contend with. So again, would not be surprised to see us test the squeeze top, pre-market high, Friday's high, maybe even get a little higher. But with such a thick squeeze top, would not be shocked for a pullback. Looking for that 10,800 to hold. And it's basically what we fought back up to and tested on Friday to push new highs on the day. And we fought back above it for Friday's close. So overall, looking for that 10,800 to hold. We can already see pre-market low right around there. If we can hold there, we're going to keep trying to push through this zone and the squeeze top to get to the daily 8 above at past the big key cycle level of 11,000. Daily 8 near 11,050, and then the daily 21 is up near 11,200. If we can't hold 10,800, then we're coming back to retest the bottom of this squeeze near this 650, and then right below big cycle level of 10,500 near the second Keltner to the downside. Ready. Ready and YM have kind of been the strongest indices lately. They have kind of been leaning the upside. Ready, you can see, almost made it to its daily 200 and then pulled back to all of these stacked daily moving averages. Doing a great job on Friday of staying within them. Looks like the Ready has already printed a new high, pre-market high, above Friday's high, so great relative strength here. On Ready, looking for, basically all of these daily moving averages to hold up. I've got 1800 cycle level and the daily 15 at 1795, kind of in the middle of the squeeze, so if we do have a little pullback, basically looking for that 1800 to hold. And if we start to lose that, then we're coming to the daily 21 at 87, and maybe that daily 50 at 78, near the bottom of the squeeze at 70. But, maybe worth drawing a little trend line in case we do have a dip. Basically, if we can stay above the daily 50, daily 21, we should see continuation of buyers stepping in to try and take us higher. We could obviously just hold right up at 1800, 1805, and start to push through pre-market high around 1820, with the goal again of getting back to what we sold off from for FOMC, which kind of spans from about 1835. If we can get through 1835, then we could quickly engulf that wick right back up to 1870. But first things first, we got to get through this 2-hour squeeze cloud, hold up our uptrend and our daily moving averages. YM holding up the best. It did get to its daily 200. It even lived above it for a while to hit that 33,000 cycle level before coming back to retest daily moving averages. Didn't even need to hit the daily 15 or 21. Got bought right up and back to the daily 200. So again, that's why I've been saying on some of these, we shouldn't be too overly bearish, even though we had that FOMC reaction. A lot of things are holding up quite well. So today, we're in between that daily 200, daily 8 at open, near the top of a squeeze, so wouldn't be surprised for us to have a small rejection here to come back to the daily 8, which now kind of aligns with Thursday's highs. So very simply, if we can hold up at this 32,200, Thursday's highs, and this daily 8, that's great support for buyers to step in and build energy to get over this daily 21 and move right back up to where we sold off from on FOMC, 32,900, 33,000. Do have a little 4-hour squeeze that's starting to form around 32,800. So keep an eye on YM for a continuation of this rally that just pulled back to about the daily 8 MA and is now trying to push away from it. And one last thing I'll point out on the indices and on ES particularly, with that, this chart is all, I always like to check in on this chart Basically, I have the 45 MA from all intraday time frames. So like 15 minute, 30 minute, 1 hour, 2 hour, 4 hour, etc. So FOMC took us through the 4 hour, which is this blue line, and we stayed below that. But on Friday, we did get up to tap that 4 hour. It was actually, that higher high that we got on Friday gave out right at that 4 hour MA. That's where I shifted directions back down. But the reason I'm reviewing this, if you notice the steady uptrend that brought us right back to that 4 hour and to Friday's high, we've now pulled all of these moving averages that were sitting lower and providing resistance. We've now pulled those all up. And they're stacked pretty much around that 37.73. That's why I said this morning, as long as we can hold right there at that 37.73 above all of our intraday moving averages, then we can build up energy to get above that 4 hour, push a little higher, which would drag these moving averages back over the 4 hour, getting us into a bullish scenario. Now, if we start to lose that 37.73, we are again pushing away and rejecting all of these intraday moving averages. So this trend line going to be very key today, these moving averages, this level. And I'm not saying just because we slip below this level, we're going to make an H and head to new lows. If we can stay above this level, it is very bullish for, a strong continuation and little rally into CPI. That's what we're trying to gauge. That is one of the theses on the week. We can reject and head back down, or we can try to rally into CPI on Thursday. The last scenario, which is a little more boring, is we stay in this range, right? In the range from Thursday's low, Friday's high, with all of these stacked moving averages on each name. So let's see how we deal with 37.73 if we get down there. A slip below doesn't necessarily mean new lows, it just means we could be entering into some chop in the range that has kind of been set, right? But moving on. Apple. Definitely led the downside after Wednesday. Pulled back to its daily moving averages, and FOMC sent it away from those daily moving averages, and sellers definitely stepped in, getting us down on Friday's low, right down pretty much to the bottom of this daily squeeze. We also have a 2-day squeeze that's a little thicker and spans from our key levels at 131 up to 133. So on Apple, get rid of this. Actually, hold on. Yeah. Either way. For today on Apple, looks like we're kind of trying to hold up at this 136. If we start to lose 136 and we're going to visit these pre-market lows, should those give out, Apple will probably keep slipping down to this 133, 32.5 zone. Should that give out, 131 is a big key level. But if we can hold either down at this zone and this 2-day squeeze bottom, or hold up at above our pre-market lows in this 136, upside target is to get back to this 138, 138.8. If we can get through that, then it's, up to Friday's highs that we sold off from. And if overall this week we can see Apple start to turn around and head back to the upside off the bottom of this daily 2-day squeeze range and these big key levels, we're overall looking for Apple to get back to these daily moving averages. That could lend to the rally this week. We need XLK to start helping out, because they've definitely been dragging us towards the downside, looking a little more bearish. But again, we're arriving back at big key levels and where we have some squeeze bottoms to support us. AMD, chips, chips, chips. AMD was a little bit more boring than, let's say, NVIDIA on Friday, and we'll check in on NVIDIA here in a minute, but AMD did do a great job. After that FOMC sell-off, got down near a 4-hour squeeze bottom, and on Thursday, rocketed right back to its daily moving averages. On Friday, basically just in a flag pattern, we did have this big daily squeeze that was stepping in really tight around AMD. You know, it goes sideways long enough, the daily squeeze starts to get in real tight from where it started, but starting to push into it. So let's see if chips can remain strong. AMD's got some resistance to deal with, spanning from, we'll have to see where this daily is as we're pushing into it, but spanning from about 63 up to this 64 and 65.5. Just meaning we can push higher, but we're going to be dealing with resistance and kind of a slower grind. But once we clear this 65.5, she could have some smooth sailing up to the daily 50, which sits around 68. And if we start to give out trend line from Thursday's lows and Friday's lows, basically giving out 61.5 today, then we could slip back to the 60, 58 and 3/4 zone. Basically just back to our moving averages. Amazon. So definitely beat up, but kind of starting to go sideways through our resistance from highs and starting to maybe potentially scoop up. Let's see if it can stay above 90 and 91, kind of making support there and trying to open above that. If we start to give out 90, coming back to test these lows around 88.5, 87.5, kind of our zones of support right now. And we have a squeeze bottom there as well. But if we can hold 90, 91 and start to push through Thursday's high, then it's up to 95 and 97, the last point we rejected from FOMC. Should Amazon start to give out this earnings wick at that 87.5, it could be to slip down to get back to this 81.3, which, as you can see, some of these levels are fibs, and that would get us back to some recent low that I found on a larger time frame. I'm not going to go hunt it right now. But that's my next big key target if she just keeps slipping and loses that earnings wick. BA. Very different story, been leading to the upside. And, you know, had earnings, which we obviously saw it slip back from, but just to those daily moving averages. I like to point out those moving averages, especially when we slip below them and then get back above. That's very bullish. It's a look below and then fail to go lower and head. So we start going back up. We trap a bunch of sellers that have to get out of their position as it gets more and more painful, and then you get some explosive moves. They also had an investment day last week, and you can see it looks way different than everything else and how it got impacted by FOMC. This was rocking up very strong that day. FOMC just brought it midway back, and it held right there and just kept going higher and higher, making it to 160, 161 on Friday, and now pushing 162. So on BA, it is getting near third Keltner, and this key zone that we have around 162 and a third, 163, almost 164, right? We also have our third Keltner sitting there, just meaning when we get to that third Keltner, sometimes we're a little overbought and we could see it take a break, come back, or go sideways. But definitely don't want to start shorting the strongest thing right now. We did get back to that daily 200, so basically we are running into some zones that could be resistance, spanning from this 160 up to 164. If it can keep trucking past that 164, the goal is to get to 169, 170. But if we start to lose 160, we could see some profit taking, right? That just brings us back to test some of these lows from Friday, late Thursday, around that 154, 155. Should that give out, then we're coming back to 150 to retest daily 8 and first Keltner. But overall, let's see if Boeing's going to continue to lend to the upside. It could just take a break and go sideways, and we see some profit taking and rotation out of a winning position to load into some other thing, maybe tech. Cat. Another strong name to the upside. Really nice reaction to earnings. Just flagged and went sideways, and then at the end of the week, when options are cheaper, took off and went for more, getting back to that 227, 229, almost 230. Again, getting above its third Keltner, so getting a little extended. So it could be time to take a break off some key levels and come back to hold other key levels. But she can just keep trucking. She's got a lot of good news, good earnings, so good headwind behind her. If she can keep going, you know, the big target would be 240, 246. If we start to come back and lose 225, then the likelihood of coming back to retest what we just held starts to increase. So if we start to lose that 225, we could see it take a break this week and come back to this 212. Coin had earnings and had some strength to get back to these squeeze tops and key levels. We're at the bottom of a daily and 2-day squeeze, so we could see some rotation into coin post earnings after not really tanking on earnings, just one quick wick down and then holding at key levels and trying to push higher. Overall, if we can see buyers step in here and start to break this downtrend, we need to get above the 63, 64 to really break that downtrend, and then it's a goal to get back to these daily moving averages above around 66, 68, and key levels at 70, kind of where we sold off from going into earnings. Google, very beat up. XLC, very beat up. But I do like how last week, I have a key zone here and key level at that 85. It looked below a few times, and now we're trying to push off of it. So basically, if we can continue to hold this zone, we'll want to mark a trend line from highs. If we can hold this zone, looking to get back to that 89, 90, daily 8, and this trend line. We can break through that, then we're talking trying to get back up to the daily 21, up around 95. We do have some levels and zones to deal with. If we start to give out 86, then we're likely coming back to test 84 in the bottom of this zone, and around 84.7. But let's see if XLC can get any love. They're very beat up lately. On the other side of the coin, finance just been rocking higher and higher and higher. GS now looking to open outside of its third Keltner. So we'll have to see if it might be time for a break. Them. And this is another reason why we could see some sideways action this week. We have some names in the market that have been really pushing and doing great. They might start taking a break. Some of the names that are beat up might start getting picked up. And overall, we'd be dealing with rotation, which can just take us sideways. But let's see, if GS wants to keep pumping, I mean, next big stop is 365, 370. If we start to come back and lose 358, then we're coming to test this trend line and 350 again. And should that give out, then we're talking about our moving averages below. JPM. Same story, still pushing higher, past third Keltner. See if it can hold 130. If it starts to lose 130, we're coming back to retest 128, 126, 125. If it wants to keep trucking, next stop 135. Meta. Definitely beat up, but overall having an interesting little gap up. So right now, 88, 90 is the zone of support. If it can continue to hold there, it would be a goal to get back to 95 and 100. If it starts to lose out, then it's coming to 85 and 80. Microsoft. Pretty decent move on Friday, getting back above 220. So let's see if this zone at 220, 220 and a half can hold us today. With the goal of getting through 22 and a half to get back to 25, where the daily 8 sits. And if we can push past that this week, it's back to 230, 232, where the daily 21 sits. If we start to lose that 220 and our trend line from the lows, then we're coming back, likely to retest 218, 215. Netflix. So, I had that big gap up on earnings. Had a good push into a large gap down from previous earnings and did not complete filling that gap. Got up to these key levels that I have near 306 and 7 and then pulled back away from them to the moving averages below. Right now we are under those moving averages. Right now it's all about, can we hold this 250, 252 key levels if we do get down there. Looking like we're going to open above 260. But, definitely a name that got sold off on Friday and didn't really bounce too much. So, if we start to lose 260, coming to retest Friday's low and this 252, 250. And if she can catch a bounce there, obviously we need to get back to these moving averages around 267 and 270, where we kind of have our trend line from the sell-off from Tuesday through the end of the week. And obviously if we can get through this trend line around 270, looking to get back to 275, should we have the turnaround this week, obviously looking back to get back to this consolidation we had around 295, 300, 305. But this is why we talk about third Keltner. Usually when the sell-off starts, it's on a very strong name that's made it above its daily moving 21. The last move that starts to bring us back is rejecting that third Keltner and setting up, a slow dump. So either way, because you can see how we can go sideways from this third Keltner, consolidate. It pushes that third Keltner a little higher so that we could have held a squeeze bottom or a daily 8. And then when we get to that third Keltner again, we're setting new highs. But overall, let's see if she can settle and start to rebound. If she starts to lose that 250, then we're talking about back to the base that we were setting going into earnings at 232. NVIDIA. So much stronger on Friday, had kind of less resistance than AMD. Setting some new highs overnight, or this morning. Overall, let's see if we can stay above 140 on any pullbacks. And if it can hold, looking for it to continue higher up to this 145 at the top of this 2-day squeeze, and 147.3 past that. And if we start to lose 140, coming back to 137, 135, these daily moving averages. Should that 135, 134 start to give out, then it's back to the daily 50, daily 21 at the bottom of this 4-hour squeeze near 130. QQQ. Overall, did a decent job holding around this 260. We did wick below it a little bit on Friday. We held pre-market low, and we had a nice push away from 260. Looking like we're going to be opening near 265. We still have the top of this 2-hour squeeze to deal with. But if we can clear, let's see, 268, we'll be getting above that 2-hour squeeze, with the goal of getting back to 270 where the daily 8 sits, and 273 where the daily 21 and daily 15 are stacked together. If we do have a pullback off of this 2-hour squeeze top in the first half of the day, basically looking for this little trend line to hold, and basically 263. So if 263 can hold on a pullback, we can continue this uptrend to try and get through this 2-hour squeeze top. If we start to lose 263 and this kind of pre-market low, then we can be coming back to retest 260 in the bottom of this squeeze. Should we head lower, next big key level I have is a 254. SPX. Let's see. I'm going to be dealing with just a small gap up now, about $10. So we're going to be opening in between these moving averages. Overall, let's see if we can stay above 37.50 today. That's kind of the midpoint of this range on Friday to hold. To continue higher, if that starts to give out, then we'll probably come to retest some of these lows from Thursday and Friday. But if we can hold above 37.50, looking for SPX to get through Friday's high, back up to this daily 50 around 3,800, and if we can push through 38.15 back to 38.50, kind of where we were selling off from on FOMC. Should we start to give out any of the lows from Friday, Thursday at 3,700, then we could be talking this recent low at 36.56. SPY. Today, all about holding 374 if we do have a pullback. I like how thin this 2-hour squeeze is getting though, and already upward oriented. So let's see if we can hold above the daily 21 at 376. If that gives out, we're going to retest 374. Should that give out, we're going to retest 372, 370. But if we can hold 374 or 376, that daily 21, looking for us to complete the journey back to the daily 50, near 379, and that psychological 380. If we can just keep trucking, we've got 380, 381.5, this zone to deal with. And if we can get through this zone this week, then it's back to the zone above that we arrived to and rejected. Tesla. So it definitely gave out on Friday. If you shorted Tesla on Friday, gave some amazing opportunity from the top of the squeeze to the bottom and to tag the daily squeeze. Overall, nice little gap up and back above our 206, 210, or 210. So, pretty simple thesis on Tesla going into this week. If we can hold above 205, 206 and a half, let's call it, that is a decent zone of support near the bottom of this daily squeeze. Could set up to try to recover from this little sell-off last week. So let's see if this zone 206, 210 contains us today. As long as we can stay above 205, 206, could set up some bullish intent to get back through 210. And if we can get through that, it's back to this 216, 223, moving averages above, and back up to the top of the squeeze. Daily squeeze basically spanning our zone above at 230, 233, what we rallied back to last week. Now we come back to retest lows. They did a great job of holding. If we start to give out that 205, then we are likely coming to retest those lows around 200 and 199.5. But if we don't get down to test those this week, and we can hold up above 205, 206 and a half, then that is at least trying to set up a higher low after earnings near the third Keltner. In fact, now that second Keltner overlaps that key level. So we were riding down the third Keltner, got a reversion to the mean, pulling back to retest. If we can stay above that second Keltner, kind of setting in a double bottom or close to it. So let's see if that 205 can hold us up right now. Well, let's see, UVXY. Been on a nice downtrend on Thursday, after that FOMC gap up. Did a great job of rejecting the top of these squeezes and the daily 8 to head back down to new lows on Friday. For continuation to the upside on the market, want to see UVXY continue this journey back down to 9 and 8.5. We are getting, near that third Keltner, which sits just below 9. And we do have this 4-hour squeeze to keep an eye on, which spans from about 9 1/4 up to 10. So if we're continued upside the market, want to see us push into this 4-hour squeeze and get down to 9. But if we're going to see another pullback, we'll likely hold above the squeeze bottom, 9.3, head back through 9.5, and try to get back up to 9.8, 10, where the top of the squeeze and the daily 8 sit. On to VIX. VIX made it back below 25. Made it to that 24.5 and 24 on Friday. Now opening above 25. A little interesting, so want to keep an eye on that. If we're going to see some downside in the market today, we'll likely see VIX stay above 25, start to push its way back to 26, where the daily 8 sits. And if we see some strong selling back to the daily 200, near 26.5, 27, where the top of that 4-hour squeeze sits. But if we're going to see some continuation of the upside today, we need to see VIX give out 25, and head back to 24.5, 24, make it down to the bottom of this 2-day squeeze, which sits near 23, 23.3. So that's it for today. Hopefully everybody found this helpful. Thanks for tuning in. Good luck today, good luck this week, and we will see you in the chat.